Welcome. Why is it Australians have continued to spend on travel when pulling back in other discretionary areas?
Oh, look, I think the main thing with travel, Kirsten, is that generally, and our leisure brands mainly sell international travel. So obviously a fair bit of domestic as well, but international travel, the travellers tend to be older, over 40 or 50, and they tend to be in the middle to high income range. So, the low income families in particular have trouble affording travel at the moment, at the best of times. But with inflation and the high cost of certain commodities and that, I think that's the reason that it doesn't seem to affect us too much. Obviously, everyone travels domestically, but internationally, it tends to be that mid to high income older person.
How do Flight Centre's total transaction values compare to before the pandemic?
Well, we're actually almost, I think for the first half of 2019, we were at 11.1 billion transaction value, and this half that's just gone, we're at 11.3 billion. So just a bit over, a couple hundred million over pre-pandemic, and we expect that to continue, even with cheaper airfares coming up over the next 6 months.
Leisure travel performed well, but corporate travel isn't yet back to its pre-pandemic level. Do you expect corporate will continue to increase over time, or are online meetings here to stay?
Look, there is a case for online meetings, but the main thing with corporate, we have between Australia, New Zealand, Europe and UK and North America, we have about a third of our transactions in those three major regions, and Asia is about 13%, so and growing. But certainly in North America and UK, Europe, we have a tiny market share, and we're back now to about 120% of pre-COVID in our corporate, even though the corporate travel is only back about 75%. And we expect that to get back probably over the next 2 or 3 years to pre-COVID levels, but it's going to take a little bit of time. Maybe 2 to 3 years to get back to 100% globally, and partly because of that, that people are using more online, and also that fares have been expensive, and they still are quite expensive. So relatively, airfares will come off over the next year or two, and corporations will do more travel for sure.
Well, let's talk about airfare prices. How quickly do you see them moderating?
Look, with the extra capacity that's come in, and I'm talking mainly international fares out of Australia at the moment, the last quarter we saw them come off out of Australia about 13%, so that's significant, and we expect over the next 6 months to come off at probably another 9%. And this is because we're getting more carriers coming in. Turkish is just starting, and airlines like Emirates is putting on more capacity, as is Singapore Airlines, Cathay, and you will have seen that in the last 6 months most of the Chinese carriers have come back, and all these carriers link through to places like Europe. We've had more capacity coming in from the major US carriers. So all this increase in capacity is good news for customers, and we think it's good news for us, even though the actual transaction values will obviously come off a certain amount for us.
Why have you made a distinction between international and domestic prices? Why aren't they decreasing by a similar amount?
Yeah, a good question. You've got to remember, Qantas, Jetstar have about 60% market share in domestic, and Virgin have a bit over 30, I think. So the competition, other than the top two carriers, only have maybe 6 or 5 or 6 or 7%. That's Rex and Bonza mainly. Whereas international, we have dozens of airlines flying in here and competing strongly for business. Whereas domestic, it's much more, more almost of people do call it a duopoly, but Qantas has a big influence here because they have such a dominant market share between Qantas and Jetstar.
By how much does the concentration in the domestic sector boost Flight Centre's margins?
Well, look, unfortunately, our margins on domestic airfares are not high, and international is much better because of the competition. And particularly in our leisure businesses, we sell a significant amount of international travel rather than domestic. Obviously, corporate travel, it's a lot of domestic here and obviously in the States and Europe as well. It's domestic or intra-Europe. And a lot of our corporates are on transaction fees, not on commission. So, one way or another, here we sell international for higher margin and generally for leisure and generally for corporate, their transaction fees. So that's how, I suppose that's how we remain profitable here.
Can the domestic sector support more competition?
Yeah, that's a really good question. It hasn't shown that it can in the past, and I know Rex is desperately trying to become significant here, but they've got a long hard road ahead with two very dominant carriers, or one very dominant carrier, and Virgin, I suppose, nipping at their heels. So it's yet to be seen. I think ideally, like America has a very competitive domestic air market, we certainly would like to see that, but it's not going to come quickly, I don't think.
To the outlook for the remainder of the financial year, are there headwinds investors should be aware of?
Look, we can't see anything more significant than what we've already seen. We've got the Middle East war, we've got the Ukrainian war, we've got a reasonable level of inflation and cost rises generally. One hopes there are no other headwinds that we can't see at the moment, but so we're reasonably confident that it's going to be a reasonable period the next 6 months. We're certainly seeing a lot of inquiry in Australia in January and February, particularly in that domestic field, and in our corporates we're still winning quite a bit of business. So, we don't see any obvious headwinds that aren't already here. That's all I can say at the moment really about that.
Graham Turner, thank you.
Thanks, Kirsten.